for that. So that's about the market setup. But let's move on. The Allcargo Logistics Board, logistics stock is in focus. The board has now approved the separation of its asset-heavy and asset-light businesses. The container freight station and the inland container depot business will be demerged into Allcargo terminals, while its equipment rental, logistic parks and other real estate assets will be demerged into Trans India Realty. Now, this sounds confusing, so let's get the management on board. Shashi Kiran Shetty, the chairman of Allcargo Logistics, joins in now. He's also the chairman of ECU Worldwide and Gati. Mr. Shetty, good morning and thanks so much for joining us. If you can just start by explaining to us, a little bit in detail what happens post this particular demerger. Are you looking to at any point separately list any of these businesses, or are you looking to raise funds particularly for any business, and if yes, which one?
Yeah, first of all, I think it's something on the card for a long time. Basically, what we have done is now created two additional public companies in addition to Allcargo Logistics. Allcargo Logistics will continue to hold the EQ Worldwide asset, which is a global international supply chain NVOCC business. And the Allcargo Logistics will continue to hold the shares of 51%, close to 51% shares of Gati. Allcargo Logistics will continue to hold the contract logistics business. These will be in one bucket, one public company. And the two other public companies will be, one of the company, Allcargo Terminals Limited, will hold the CFS and ICD business. And there will be no real land available, because all the land is leased from third parties. The CFS business will remain an asset-light business in the CFS as Allcargo Terminals. And all our equipment business, the logistic parks, in the future development of logistic parks, all that will happen under Trans India Realty and Logistic Parks Limited. So this is three public companies, and the shareholding will be absolutely mirror image. So every shareholder for one share of Allcargo Logistics will get additional shares in the two other companies. So it is a mirror demerger. And the whole idea is that when Allcargo was founded 25 years ago, and in the last 15 years since the company is in the public market, the company has grown over 18% year on year in revenue terms, and almost 15% on EBITDA basis, almost, or maybe I'm a little bit here and there, but almost 15% year-on-year growth in EBITDA number. And today, all the business are under one company, which is not able to bring a sharper management focus and a very clear direction in terms of the future management of the company. So we felt that the company has now reached a scale. This year will touch over $2 billion of top line, slightly more maybe. And it's a fairly large company. And we believe that each of the businesses are very easy to analyze if they are in different buckets. So that is why we are keeping the asset-light services business in Allcargo Logistics. We are keeping the infrastructure-related business, that is CFS and ICD. And in the future, the company will continue to grow in the CFS ICD business and may also get into the rail transportation business. So they are quite synergized between each other. So that is why the CFS and ICD business will go into Allcargo Terminals. And the realty business, that is the logistic park, which has no connection really to the international transportation of business. It is more related to India's domestic logistic play. And it will also accordingly attract the kind of investors who want to participate in a growth business, and also the real estate business, which is more like an annuity business.
Sure.
And they have the option
Mr.
to also
Shetty.
invest. Yeah.
Mr. Shetty, thank you for elaborately explaining that to us. We got that point. So three individual listed entities housing those three businesses. Just want to understand what is, and you mentioned that total top line is going to be a little over $2 billion this year, Allcargo. So once the demerger is complete, how will the revenue be split and how will the debt be split in these three entities? I think your total debt as of September is just over 1,800 crores, if I'm not mistaken.
So can you give us the balance sheet structure and also whether you'll raise any fresh equity capital? What would be the debt equity ratio, roughly speaking, of these three separate listed entities?
So those details are today not available because we have not really gone into that part of the construction of the how much equity and debt will move into the different companies. So obviously, we'll have to look at it more closely when we file to the authorities the entire data. As regards to your question about the debt itself, if you look at our debt, the debts are distributed in various businesses. We have close to about 500 crores debt in Allcargo Logistics for that business itself. And on the CFS business, we roughly have about 150 crores. And most of the debt are in the logistic park business, where we have the about 6 million square feet of warehouses as asset. And almost all the assets are now leased out. And as we have announced also earlier in the past that we have a deal with Blackstone to buy some of our warehousing assets. And there are some regulatory approvals are still pending. So that is why that transaction has not got completed. So almost about 1,000 crore of debt most likely will move into the realty business. And the rest of the debt will be distributed between other two companies. And as far as revenue is concerned, Allcargo Logistics will continue to hold the EQ worldwide business, which is almost 80% of our revenue. And the consolidation of Gati will happen under that company. And the contract logistics will also remain in Allcargo Logistics. So that means significant amount of revenue will remain in Allcargo Logistics. CFS and ICD segmented revenue will move into Allcargo Terminals. And the crane rental business revenue and of the logistic parks rental income will go into the realty business. And now when you look at it...
Okay, so the Allcargo Terminals and the real estate business, I understood that breakup of three businesses, but can you tell us what kind of growth do you hope to see in terms of revenues for the real estate business? Because you spoke about how 1,000 crores of debt will move into real estate business, but what about the revenue growth there? What are you looking at? And also in the CFS and ICD business, what kind of revenue growth are you targeting?
In the real estate business, it all depends on how many logistics parks we will be able to set up in the future. Right now, as we speak, we are currently developing a logistic park outside Bangalore and also in Calcutta. And we are also developed a logistic park in Nhava Sheva. So these three new projects will come about. And already we have about 6 million square feet. You can take roughly about 120 crores of rental income is already accruing. The expenses in the rental business is very, very limited. Most of the amount, gets translated into EBITDA number. Also, there is a high interest cost there. And the crane rental business, which is generating roughly about 40 to 45 crores of EBITDA every year. So you can assume that easily about 100 crores, 120 crores roughly of EBITDA will be in the realty business to service the 12,000 crore debt. If we sell the assets, obviously all the debt will go away. Almost 600-700 crores of debt will go away. In any case, all the debt are long-term debts. They are LRD debts, and they are getting serviced by the rental income. Yes, and the Allcargo Logistics business will continue to grow at least about 15 to 20% year on year, and the CFS business will go roughly around 10 to 12%. It depends on how many more facilities we'll be able to set it up also in the future in an asset-light model. That is how we're looking at it.
Okay. All right, Mr. Shetty, we will then leave it at that note for now. Thank you very much for joining in and giving us some sense of how this demerger will really play out and how the residual shareholding will look like. That is Allcargo Logistics undergoing some business changes there. We'll take a break on that note. On the other side,